for June coming in above expectations at 4.7% on year, while CPI tracked in line at 1.9% for the year. Well, the Chinese smartphone maker Xiaomi kicked off its initial public offering, debuting on the Hong Kong Stock Exchange yesterday. But as the top smartphone maker in China, was established only in 2012, will Xiaomi's performance meet the hype? It was down on listing, a better performance today. So let's hear her thoughts on this. I'm joined in the studio by Claudia Kwan, investment analyst at Morphic Asset Management. Claudia, good to see you.
Yeah, good to see you.
You've obviously been watching this stock. I think you've been a holder of some of their phones. There was so much hype around it. It did disappoint on listing. Just take us through some of your thoughts on what happened then and why it disappointed so much.
Yeah, Helen, I mean, it's very interesting timing of the listing given the China-US trade tensions. However, going into the listing...
So just meant you couldn't divorce that from what happened at the listing and I guess, the reticence that some investors had about it?
Well, I think the company's view is that they don't have any plants in the US and their largest markets are China and India, so therefore they can say that they largely are divorced from it. But I think it is actually a proxy, given that Xiaomi really is the poster child of this China 2025 concept, the ambition of the government to move from a low tech manufacturer to a high-tech manufacturer. So our tracking of it is very compelling or very interesting, given that we think it really does provide quite an interesting view as to people's sentiment of this US-China trade tension.
All right, so let's just give us the details on how big it became, because it was, what, a unicorn?
Yeah, it's a fascinating story. Launched in 2012, and 3 years after it launched, it became the #1 smartphone manufacturer in China. And in 2007, it became the #1 smartphone seller by unit shipment in India, surpassing Samsung, which held the top spot for some time. I mean, it's phenomenal growth. 3 years after launching, $10 billion of sales.
All right, so how does that happen? Do they, I'm going to be really blunt, do they steal everybody else's technology? How can they do that so quickly and become such a big seller?
They definitely are a low-cost manufacturer, and actually if you see the cost there, they are the lowest cost. They had a wholesale model, which meant they didn't actually have retail outlets. They went straight from wholesale to the consumer. So they were offering a quite compelling value proposition, and as the holder of a Xiaomi smartphone since 2013, it was about 50% discount to Apple.
All right, so the cheapness was what was cheapness in an ultimate price was what attracted a lot of buyers.
Absolutely.
So do Chinese and Indian buyers, before then you said Samsung was market leader, do they buy Apple phones? Have they been popular in those markets?
There are definitely sales there, but given the closed internet infrastructure in China, whereby Facebook, Google is blocked, the use of a Xiaomi is actually, the value proposition is much more compelling because you do not need these other app stores, etc.
All right. Are you bullish on it? Do you like it? And then what happened today?
It's interesting. I mean, if you wanted to be bullish, you'd call it the Apple of China with growth. If you wanted to be bearish, you'd call it a cheap smartphone operator. Now, we at Morphic don't actually list in IPO, partake in a lot of IPOs, given that we like a trading history, and valuation is a very strong proxy for us. So if you look at Xiaomi, it listed at 23 times earnings, but if you look at Apple, it's traded at 11 to 15 times, or Samsung, the more local listing, the Korean listing, at 6 times earnings. So on those metrics, it looks hugely overvalued.
Yeah.
However, if you think it's going to be the Internet of Things platform, you'd probably more look at Baidu, which is the Google of China, trading on 23 times, and then it's largely in line. However, you know, these internet companies have actually not had strong performances post-listing. Facebook dropped 50%. And Alibaba in 2014, that's the Amazon of China, initially went up and then fell 50% from peak to trough. So I think from a Morphic standpoint... And
has come back up enormously
Yeah,
since
they've all
then.
come back enormously since then. So I think the value proposition will probably be more compelling after a couple of months or 12 months of trading would be more likely to have a look at it. But
all right, so are you saying you would give it the benefit of the doubt? You're not saying it's a dog, but because it clearly didn't thrill investors on listing.
Yeah, I think the risk is that 80% of their revenues are from the smartphone, which the founder actually went out to say that he will cap the margins on that business. But if you actually do believe in Le Jun, the founder's ambitions of becoming an Internet of Things platform, that's the bull case.
Yeah, so what is that? How does it, meaning you can work your Internet of Things from this smartphone?
Absolutely.
So you can turn your lights on at home and all those other things?
Yeah, I mean, there's homeware shops now in China where you can buy a Xiaomi toothbrush, which is connected to your device. So they...
And just a minute, how would that work? And why would you need a Xiaomi toothbrush?
Well, I think maybe to track how many times you're brushing your teeth. I mean, there's lots of different things which are getting connected to devices, but Xiaomi's strategy is actually to take you from the device and to capture you there, and then to take you everywhere throughout the home.
All right. Just let me read you a bit of a devil's advocate view, and I know you're not necessarily pushing them, but a devil's advocate view from another Asian-based analyst who said after the listing that the coming out party was less than a hit, didn't exactly attract the feeding frenzy that was expected from high-tech investors, and that many global high-tech investors are continuing to feel more comfortable with those stalwarts like Apple and to stick with those. Do you agree with that view?
I think there is two different views. I mean, absolutely, Apple is the safer bet from now. And listings, by the purpose of it, they need capital and they need to deploy that capital somewhere. So Xiaomi listed, the deal size was 5.5 billion Hong Kong dollars. Now, what are they going to do with that money? They need it to invest in this Internet of Things platform. Is it a slam dunk? Well, India doesn't have a closed internet service providing operation. So therefore, actually, they can go onto the Google apps. So are they going to get the margin from the Indians that they maybe can get from the Chinese?
So would they be happy with just the Chinese market? Would that keep them up there in those global high-tech performers?
Yeah, I think if they are able to execute on the Internet of Things strategy, which is a much higher margin business,
the Internet of Things
platform, then absolutely they could demand it. But that's an evolving,
very evolving. Yeah, it's still very new.
Infrastructure is very new. The adoption rate, it's hard to name because actually it is consumers' behaviour just moving day to day. And are people going to buy a Xiaomi toothbrush? Is that necessary?
Do we know? Well, I would say absolutely not, but then I'm probably not their market. But if they are going along that line, how do they know that Chinese consumers, if they just stick with the Chinese market at the moment, will really adopt either their technology platform on the Internet of Things or their products that are Internet of Things products?
I mean, it's easy to say that China, the proliferation of online apps in China has actually been more compelling than other countries. If you go to China nowadays, it's very hard to find a taxi without one of the taxi apps. Almost, I would say, impossible in my recent trip there.
Really?
And online payments, Hema, which is the Alibaba supermarket, you can't go in there and shop without an iPhone or a smartphone. So it has potential. I mean, there's definitely a buyer for the thesis. However, we at Morphic are a little bit more cautious at this stage.
All right, so why are you even bothering to look at it if you're still cautious and you've just concentrated on one listing in Hong Kong?
I think that it's one of the biggest listings we've seen, so it's always good to gauge this market sentiment. And at this time where it's really quite a topical time with the US-China trade tensions, it's very important to track. But actually, Xiaomi is impacting other sectors and actually other countries. Like we mentioned, India, it's the #1 smartphone operator. We have some big positions in Indian banks. And actually, it's interesting because that is the digitalization story of India, which is huge for our near-term thesis, which is the corporate loan growth recovery. But our long-term thesis is that the unbanked, those in remote parts of India that otherwise can't get access to banks, start to be able to get access, and the underbanked, which is the small to medium enterprises, which prior to smartphones had no evidence of, or prior to online payments had no evidence of cash flows. So now they're actually being able to get loans. So this is increasing the penetration rate of the banking system in India.
Yeah, no, it's an extraordinary story, and we'll no doubt talk about it again. Claudia Kwan from Morphic Asset Management, thanks for joining me.
Thank you, Helen.